Matt Laridon, how's it going?
Jonathan, thank you so much for the invitation. I don't get nervous about much, but being on with a professional like yourself, I had to work myself up, do a couple jumping jacks out in the hallway. So yeah, thank you very much for the invitation. It's very honored. Thank you.
Yeah, I appreciate you saying that. So tell us a little bit about yourself.
Okay, great. Just real quick, out of college, I was going to go into advertising or teaching, and I'll make the long story short. And my roommate at the time out of college was working for a bond trading firm, a stock exchange bond trading firm. He was lazy. He was son of a very wealthy neurosurgeon in Laguna Beach. And I said, if he can do it, I can do it. And I was selling advertising at the time. And long story short, I ended up working for getting hired by a pretty prominent Wall Street brokerage firm. And I liked debentures. I liked bonds. I liked analyzing debt. I think if you look at the debt structure of a company, you can see what the stock's really worth. So I did that, and then I realized that there was fee compression coming in the industry. I managed to sell off. I started my own brokerage firm, sold it off, dabbled in private equity, then went into commercial real estate, and then from there, sort of transitioned to still doing commercial real estate, more on the investing side. But now I'm teaching other brokers, mortgage brokers, real estate agents, real estate broker owners, how to find new lead sources that are different yet cost effective, and how to find motivated buyers or sellers in real estate.
It's really interesting because when you're in real estate, whether you're on the retail side or on the investment side, it's really always about lead generation. And I think a lot of it translates like how are you're trying to keep your cost per lead down and you're trying to convert more. What are some of the biggest roadblocks or things that you're seeing that are holding people back from generating more leads?
I think it's a great question, Jonathan. Um, everyone talks about buying leads from major, sourcing companies, the Zillows, the Realtor.coms. Um, and that's great. And hey, whatever way you're generating leads, whatever way is working for you to get in front of qualified buyers. And for me, a qualified lead in the real estate business is someone who wants to buy or sell real estate in the next 15 to 45 days.
Mm.
And 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 then same, if you're in the mortgage business, hey, you want to, get a hold of clients that need to finance a property in the next 15 to 45 days. So I want to help broker owners, real estate agents, real estate investment professionals, flippers, mortgage people get in front of many qualified leads as possible in the most cost-effective way. And just by accident, I sort of came up with a system, and I'll reverse engineer it for you real quick. We got a referral from our CPA saying, "Hey, this guy needs to do it. He's selling a property. He's in escrow. He's going to pay $500,000 in taxes unless he does this thing called the 1031 exchange.
Mm.
And can you help him?" And the transaction went smoothly. It closed in about 40 days. I just sort of reverse engineered that client. I said, "Where did he come from? What's his demographic? What's his age? Where do we find these types of clients?" And we reverse engineered it, tested it out, made 19,000 phone calls to real estate agents, broker owners, investors. And we found out that investors will list and sell with you if you can show them how to defer capital gains taxes, and that's via 1031 exchange, and then show them a replacement property that either has higher income or after repair value, or a better location, sort of you know, a, a, a nicer looking property per se, or a property with less hands-on management. So we narrowed that down, show them how to defer capital gains taxes, show them a replacement property that covers those three. And then we just sort of, it was a multiplier effect, and we figured out, wow, there's people out there. And we reverse engineered that, and there's so many free data sources out there where you can find these individuals if you're willing to work, dig a little deeper. And I really feel, and I'm passionate about real estate coaching. I worked for a major real estate coach for a short term, and I love the idea of coaching and helping others now. I'm getting a little bit older. I don't like beating the streets as much as I did back in the day. But yeah, getting in front of qualified leads. As salespeople, we just want to be in front of as many qualified prospects as possible.
Yeah, that's so interesting because the way that you did it was you So typically, I mean, even I had this problem when I first got started and I was trying to wholesale. My job was find leads and then get it under contract and then try to find the end buyer. But what you're doing is you're finding people that have this problem and and then you're trying to solve it ahead of time and then going backwards to find the solution that way. So I was going to ask about how you nurture these leads and then how you convert them, but it seems like that's you have an extremely high conversion rate, lead to
Okay.
conversion rate.
Yeah. So, I mean, and for your viewers and listeners out there, that want, whether real estate professionals, whether mortgage professionals, whether they have like you did, you had a property under contract and you had to go find a buyer,
Yeah.
right?
Mhm.
Um, so I'll sort of lay out. Here's the secret sauce for your listeners, for your viewers. There's three websites out there: CREXI, CREXI. There
Mhm.
is CIMLS, and there's LoopNet, LOOP, capital NET. LoopNet's owned by CoStar, a big data aggregator out there. And
Mhm.
then you dig deeper and you say, hey, I want to find everyone that's selling a property in a 20-mile radius of where my office is or where my potential properties might be that I want to sell. And you
Mhm.
draw a radius and you refine the search, and then you can find these investors who are selling properties. And there's two lists here. One are the people that are currently selling but not in escrow. Those are great. Those are, you nurture those a little bit longer. But what's really, you know, fun or exciting for me is you find the ones that are in escrow. That means they're in escrow, they're about to close on the transaction. And 80% of these people will need to identify a replacement property in the next 15 to 45 days.
Mhm.
And so whether you're a mortgage person and you're helping people finance, these people are going to need financing. Whether you're a wholesaler, you've got a property under contract, these people might want to look at your property, know your numbers. For the investors, they want to defer the capital gains tax via 1031 exchange, and there's strict guidelines with that. 45 days to identify a property, and then 180 days to close on that property. Those That calendar runs concurrently. So you talk to these individuals. Hey, I understand you've got a property that's in escrow right now. Will you be doing a 1031 exchange or investing in an opportunity zone? And it's, you know 90% of them don't know what an opportunity zone is, but it opens the dialogue.
Mhm.
And once we get that dialogue open, well, we explain what an opportunity zone is to defer capital gains taxes. We explain how a 1031 exchange works. And usually they go, okay, 1031 exchange, but the dialogue's been opened. And then you just find out, hey, if I were to find a property for you, what would be your ideal property be? Would it be, single family residence that you're 1031 exchanging into? You want multifamily, you want single tenant triple net lease, you want industrial space, and they'll give you exactly what they're looking for, and then you go out and you find those properties for them as wholesalers. Hey, I've got a portfolio of properties here. This is the ARV, the after repair value, or this is what the cap rate would be on these five properties. Can I share more information with you? And some will say yes, and some will say no. But you want to get after those properties that are first in escrow. If you do a deeper dive into CREXI, CIMLS, and LoopNet, you can find these individuals. Okay, and I just it's amazing to me that more individuals aren't using this. So that's where I sort of wave my flag. That's how we're a little bit
Mhm.
different. That's how we built our business, in the commercial side.
Well, one thing I like that you mentioned is that you're starting off with a very small radius, 20-mile radius within a certain specific area, and just concentrating on that.
Yeah, yeah, and it could be a 20-mile radius from your office. All right,
Mhm.
so you have some geographical familiarity, culturally of where you are and what the investment properties are. Or say I've got a property under contract in Arizona,
Mhm.
right? And I'm in
Yeah.
Long Beach. What I'll do is I'll reach out to all the investors in Arizona and let them know, even though I'm in California, I'll let them know, hey, these are 40 properties that are available for sale in your neighborhood, or this is a property that might be a good replacement property for your 1031 exchange. I don't know if we need to go back and sort of explain a 1031 exchange. Or is your audience familiar with that?
Yeah, I mean, just high level, it's basically you're taking one property using the funds, you sell that property, but instead of touching it, you put it into a third party escrow account and then use that money to go buy another property so that you don't have to pay the tax on the the appreciation of that property.
Exactly.
Yeah.
And the appreciation, also the, when you buy an investment property, you have, you being a CPA,
Mm,
you have accelerated depreciation.
yeah.
So your capital gains tax is significant. A perfect example is we worked with a client recently, and he had about $1 million capital gain in this multifamily property. And he was going to have to write a check for about four or $500,000 to the IRS in capital gains taxes. But what we did is we structured a 1031 exchange, very, very simple to do. Like you said, a qualified intermediary, funds go
Mm,
there. And then you have 45 days to tell that qualified intermediary, 45 days after the close of escrow, which our investor did. Um, and then you have to close on that property in 180 days. It's very simple. 1031 exchanges have been around since 1921. They're not going anywhere.
yeah.
So that's how you defer the capital gains taxes. And what we really zeroed in on was older retirees. I mean, the last business was a plumber, and he was selling one of his multifamily units because he didn't want to deal with what we call the tenants, the toilets, the trash, the
Hmm.
teenagers, the telephone calls, the five T's.
Yeah.
And he didn't want to manage the property. He didn't have any family members that wanted to manage the property. He didn't want to hire a property manager at 5-10% a month because he'd still have to deal with all that stuff, indirectly. And so
Yeah.
what we did is we bought him a 7-Eleven building, not the franchise, just the building. I believe it was in Colorado Springs, Colorado. He has zero landlord responsibilities. All right. He collects a check at the beginning of every month. He has one tenant, a great corporate tenant. 7-Eleven's been around forever. The
Hmm.
corporation does a direct deposit into the investor's account every month, and he doesn't do anything. Now he can go on cruises, visit his family in Minnesota, go spend some time in Florida during the winters. And so that is sort of our specific wheelhouse as far as our real estate, commercial real estate practice is concerned.
Yeah, the triple net lease has always been something that I mean, I think is a great thing because you have the property taxes, the insurance, the maintenance, everything is taken care of by the tenant. Now your cash flow is a little bit lower just because you don't have to deal with all that, right? But it's a lot less headache.
Right, right. And I'm still a big believer in, younger investors. I still am a big believer in multifamily. I
Mhm.
mean, that's multifamily and storage is, what I really like because they've got built-in rent increases. You have value adds in some situations, but for the older investors, they want to transition out of multifamilies. All the headaches of managing it,
Yeah.
and go into something with zero hands-on management. That's a single tenant triple net lease. As younger people, where we have more energy and we can go out and manage multifamily, I still like that's where the best returns are.
Mhm.
You're going to give up a little cash flow going over into a single tenant triple net lease.
Mhm.
Um, but that's what these individuals want.
Yeah.
So, yeah,
Just less maintenance. I mean, even with a property management company, you have to manage the manager, and they're not always giving you the best people to go out and do fix things or any of that.
100%. I agree with you.
Yeah. So you had mentioned quickly, I know this is like getting really, really deep into the weeds, but opportunity zones. I had heard about this where you could basically, if you had um, capital gains from any type of asset, you could funnel that into an opportunity zone and defer for like 15, 20 years, something like that.
Well, the real benefit, and I think they're going to be renewed now that we have a new administration in there.
Hmm.
Um, the original Opportunity Zone Act took place in 2017, and the idea is you could take any type of capital gains, stocks, bonds, mutual funds, collectible cars, collectible art, real estate, land. You take the cap. You only have to do the capital gain part of the transaction. Unlike 1031 exchanges, you have to take the
Hmm.
sales price. In
Yeah.
an opportunity zone, you take the capital gain, stocks, bonds, mutual funds. You buy a property located within an opportunity zone, typically an economically disadvantaged area. Um, and what would happen when it first started in 2017, you got a 15% discount on your capital gains tax,
Mhm.
okay, right off the top, and and then you didn't have to pay your capital gains tax for 5 years. So you deferred the capital gains tax for 5 years. So you have the power to use that capital gains money and without paying the tax. Then when you did pay the capital gains 5 years from now, it was at a 15% discount. And then if you held that new property within that you bought within an opportunity zone,
Mhm.
if you held it for 10 years, there's zero capital gains taxes on the appreciation if you held it for 10 years. So you could buy land. And again, there's 9,000, over 9,300 opportunity zones in the United States. So for real estate professionals, and I'll let you continue. For real estate professionals, it opened up a whole new market. And really, I told our coaching clients, focus on the major corporations in your area where executives are exercising stock options. And there's a
Uh,
significant capital gain there. And you can show them how to alleviate that capital gain. But it's 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 really incredible. I think it was Scott out of Florida and Booker, Cory Booker, that came up with this. So it was bipartisan, tax, uh, part of the bipartisan tax effort in 2017. So I love opportunity zones.
Yeah, I mean, there's just so many ways to make money in real estate, and then if you can find the right niche, like that would be a great niche to get into, right? Because there's a lot of people you can find people that are tired of the stock market volatility, but they don't want to have to pay the capital gains on those on the increase in the value of those stocks. So if you could find those people and you understand how to take advantage of opportunity zones, you can make a lot of money.
Right, because as a real estate professional, either as a real estate agent or even as someone that's doing real estate financing on the mortgage side, these are clients that are ripe,
Mhm.
and if you can educate them, still people still don't understand opportunity zones.
Right.
And I believe it was going to run out. The real advantage is sort of tapered off. If they renew opportunity zones again under the current administration and the tax benefits, the idea was to invest in economically disadvantaged areas that
Mhm.
needed influxes of capital.
Yeah.
And that's where so you've got to be very selective. In Long Beach, California, where I live, born and raised, the opportunity zone areas in Long Beach, I mean, were not good investments. But
Mhm.
in some of these other, states and metro areas, there's some really incredible opportunities just in land. You can buy land, you can buy buildings. There's some certain requirements that you have to improve or substantially improve the value of the property through capital input. Um, but yeah, I love opportunity zones. I wave the flag for opportunity zones for real estate professionals because you can take someone who sold art, sold a business, all
Mhm.
right, not the property, but
Yeah.
the business,
Mhm.
and take those capital gains. So for real estate professionals, it opens up a whole nother market, and you're educating your client, um, and and there's your value add. We have a client who's a real estate wholesaler, and he works for a major company out there. Just the fact that he could talk about opportunity zones and he knew what opportunity zones were differentiated himself with his competitors as far as
Mhm.
showing his properties. The client went with him, didn't invest in an opportunity zone, okay? But the fact that he knew about opportunity zones and the investor knew
Yeah.
about opportunity zones, they had a common dialogue, and it
Mhm.
positioned himself as an expert.
Oh, yeah, for sure, and it just shows that you're not just out there trying to flip contracts. You're actually doing research. You take your business seriously.
Yeah, exactly, exactly. And,
Mm.
and Elon Musk said, our compensation is directly proportionate to the difficulty of the challenges or problems we solve.
Yeah.
And we're solving a tax problem for clients, and they appreciate it.
Yeah, I think about that Elon Musk, quote all the time.
Yeah, we got to bring
Uh,
value.
yeah, for sure. It's not just showing up. Well, I mean, it is showing up, but also being able to bring value.
Yeah,
So, I know that you work with a lot of newer investors, newer people that are just getting into the real estate industry in different routes and everything. What are some of the biggest challenges that you're seeing with those that are newer with when they're trying to get their first deal?
right. Um, I, I think the biggest challenge is that a residential real estate professional, all right, a residential agent,
Mhm,
um, feels like the commercial side is so prestigious and so difficult to enter, and
mhm,
they're a little intimidated by it. And what I've got to tell them is, I mean, really, the difference between a residential real estate agent and a commercial agent is the business card. I mean, it
mhm,
really is. Change your business card to 1031 exchange specialist or commercial specialist, and you're right in there. And
mhm,
we advise our clients, circling back, is you don't go for the high end properties that are for sale when you're finding them on these three different websites that offer free lead sources. Basically,
mhm.
you want to go for the lower price commercial properties, because in my market, a lower price commercial is 2 million. All right. uh, and a higher commercial property is 8 million. It could be different in Springfield, Missouri, than it is in Aurora, Colorado. But circling back to your question, what's the biggest challenge? I think it is all mental, all mental for these young real estate agents. And if you approach it as you're solving a problem, these individuals will listen to you. And there's a thing called imposter syndrome, and I suffer from it, and I
Me
think a
too.
lot of professionals suffer from it. It's like,
Yeah.
I don't know, I don't give myself enough credit for what I know, and
Mhm.
therefore I'm an imposter, when
Yeah.
in fact, you know just as much really as the next guy. So as far as the first transaction is concerned for young real estate professionals, is just having the confidence to do it and keep going out there, and just keep going for it. And the more people you talk to, just blind luck, you're going to get a couple transactions, but you want to be prepared. Success is a intersection of opportunity and preparation, as far as
Yeah.
I'm concerned.
Yeah, so how would one prepare for, how would one prepare?
Okay, so let's just say I just did a big workshop for the Los Angeles Board of Real Estate Professionals, and they all passed the real estate exam, right?
Mhm.
So they knew the basics of a 1031 exchange. You can look them up.
Yeah.
But I think what you do is you've got to get yourself in people who need your services. And these LA is a big market, really high end real estate, but they had this thought process that they weren't smart enough to do this. But in my world, I believe it's a matter of when, not if, you're going to have an opportunity to help someone with a 1031 exchange.
Mhm.
Friend, family member, client, referrals, etc. So the biggest hiccup is making that first call to this investor, because
Mhm.
you think you don't understand, you don't have all the knowledge. No one has all the knowledge. And I tell our coaching clients who want to do more 1031 exchange business, or the broker owners who want to have a smaller commercial side into their business, is you've got to be able to go out and make contacts. You have to go out and approach it with a servant heart, being of service, and then make that call. We're all going to make mistakes. They're going to
Mhm.
ask you a question. I still get asked questions that I don't know. Said, I don't know that, sir. However, ma'am, I know someone who can get that answer for us. Let me give you a call back. Let me reach back out to you. It's a contact sport. Just get out there, make contacts. And in this business, this 1031 business, it's way different than residential.
Mhm.
It's in business, in the 1031 market, it's a numbers game. It's a non-emotional purchase, a
Yeah.
non-emotional transaction. And these individuals take your calls. They're typically business people, right? They're not worried about the time of year it is for transitioning their kids into school. They're not worried about school districts. They're not worried about moving. This is a
Mhm.
numbers game. And these investors take your call because, fear and greed. Fear, they don't want to lose the tax benefits, and greed, they want the best possible return. So these are
Mhm.
people that will take your calls and listen to you.
Yeah. Yeah, for sure. If you can help them maximize every single dollar that they've created into more dollars that they're going to work with you.
100%, 100%. And you've got this greed fear thing going on. So they don't want to pay those $600,000 in capital gains taxes. They really don't. And a
Mhm.
lot of times, even if it's a commercial person that has the listing and you're just contacting the client about representing on the buy side, they understand that a lot of these commercial guys will only show them they're in-house listings, meaning, hey, I'm with ABC Commercial and we've got 6 properties that we have in inventory that we're selling. They'll only show them those 6 properties. But if you're with a Keller Williams, an EXP, Epic, I mean, you name it, whatever residential firm, you can show them properties from anywhere in the United States. Once you find out what these investors' replacement property parameters are, what are they looking for? And then you go back to these 3 websites and you go find these properties that meet their parameters. In this the technology now, there's so many free resources out there. Again, those 3
Yeah.
websites that I told you about.
Mhm.
And guess what? I mean, no open houses on the weekend, no touring 30, 40 different homes, no calling for sale by owners, expired listings, neighbors have just listed, just sold, competing
Yeah.
against the veteran established agent in the marketplace as a
Mhm.
new agent. Um, you don't run into that. And the best part is, what do you need to do to be in this business? You need a phone, you need a computer, you need some data. All right. And you're in business. You change your business card from Joe, Sarah at residential real estate to Joe or Sarah at commercial real estate. And it's it's if I were a new agent, this is all I would do. And the best part about it right now, and everyone's talking about the NAR versus DOJ and buy side commissions and things like
Mhm.
that. And I think there's going to be fee compression on buy side and residential. I know I get a lot of pushback from residential agents. In the commercial side, the buy side fee is fully disclosed. Okay. So you'll see a 7-Eleven for sale. And I'm just circling back to 7-Eleven. You're buying the building, you're not
Mhm.
buying the business. And it'll say co-broker fee, 2.25%. It's disclosed. The sellers do not mind paying a professional real estate agent on the buy side, paying the buyer's agent to bring a buyer to them because it's a tax write-off.
Yeah.
Okay, you don't get to write off your commission when you're selling your primary residence,
Yeah.
but in this commercial side, yeah, the investor just takes it right off the cost basis. So if they pay a $50,000 commission to the buyer's agent, they
Mhm.
don't care because it comes right off their tax. It increases their tax basis. So it's a
Yeah.
write off for them.
Yeah, it really is just all about numbers.
Pardon?
It really is just all about numbers.
It is.
Yeah.
100%. And again, in everything, life is math. A good friend of mine, Michael Loeb, said that life is math, and it's getting out there and just talking to people and positioning yourself. And what we found is the hidden benefit. I shouldn't say hidden benefit, but these you get one of these people as a client,
Mhm.
they're A, it's probably not the only investment property that they have. And
Yeah.
then B, they, birds of a feather, they all hang out together. So
Yeah.
the question then becomes, who else do you know, Mr. Jones, Mrs. Smith, that might need
Mhm.
this type of service, who has a highly appreciated asset that they want to sell, but are worried about paying capital gains taxes? They all have friends who own investment properties. So again, the cost of entry into this business is minimal. I mean,
Right.
no door magnets, no refrigerator magnets, no bus bench advertising, no grocery cart advertising. Pick up your
Yeah.
phone, find the data, talk to them, go in there with an attitude of, hey, is it okay if I find a property that meets all of these criteria you gave me? Multifamily in, San Antonio, Texas at a cap rate of 7. If I find something like that for you, is it okay for me to give you a call? And they say yes, because they want to know what the best properties are out there available. And then you just confirm with them. So when I find you an investment property that meets your criteria, you'll take my call and we can make an offer. Yes. And now you've got this database. And even if they don't use you the first time around, guess
Mhm.
what? You're just building up your database for future transactions.
So it really is about just talking to as many people as possible, finding out what it is they want, and then matching it with what other people have.
It is so simple. It is so, so simple. I mean, in what other career, besides real estate, can you have a high school diploma and that's it? You don't have to have a master's degree. You don't have to have an undergrad degree in business and
Mhm.
finance to be
Yeah.
very, very successful, in real estate. I mean, get your license, hang it with a firm, get some advice, some counsel, get some coaching either in your office or through a mentor or hiring a coach, and you will create a life beyond your wildest imagination. The other side that I really, really like about it is you're learning along the way so that you know how to identify the best investments once you start building up your investment portfolio.
Oh yeah. And also it also holds a lot of weight too because you're not just in the transaction, you actually own it, you have experience. Some of the things that you're never going to understand if you're not actually owning property.
Exactly,
Yeah.
exactly. And I mean, understand I came from the Wall Street side, so I didn't
Mhm.
have my parents weren't real estate investors. They were all retirement accounts and 401ks and stock market related. I wasn't exposed to real estate until the value of real estate investing until about, 15, 20 years ago. Looking
Yeah.
back, and it's one of the things my wife and I we bought a nice residential property, and then I wanted to keep up with the Joneses. And as I did better, we bought a bigger, nicer trophy property. Looking
Mhm.
back, I would recommend to younger investors buy a duplex, buy a fourplex, rent out the other units, build
Yeah.
equity. But I was all about the glamour,
Mhm.
and having this prestigious property, not knowing really the benefits of real estate investing. And I think real estate still is the best way to accumulate wealth in the United States.
Yeah, I love that advice because I wish I had done that too. Well, I mean, where I used to live, duplexes were still just crazy expensive and they're very, very rare. But yeah, go out and house hack, live for free. Have someone else pay your housing expense. It's like a great, and then once you're ready to move out, you have a rental property that you have a multi-unit. It's a great strategy.
Yeah, it is. It is. And I love, I mean, and you were, what I love about what you do and how you're helping people, Jonathan, is you're teaching people how they can use their retirement accounts to invest in all types of different assets and notes in properties or interest in properties. And it was what just fascinated when you were on my podcast. Just you opened up a whole new world for me. And I mean, part of the reason I do podcasts is I get to interact with intelligent, young, bright, you know, passionate peak performers is what I call people like you that just are passionate about what they do, highly intelligent, and it helps keep, you know, and I hate to keep doing all these quotes, but Abraham
Mm.
Lincoln said, give me 6 hours to cut down a tree, I'll spend 4 hours sharpening the axe. So when
Yeah.
I'm on with really highly intelligent, challenging people like yourself, I'm sharpening that axe. It keeps me on top of my game. So, I learned a lot from you and I still do. I follow you like crazy.
I appreciate that. Thank you. So I know we had talked about mindset issues and imposter syndrome, and I don't think we're ever going to get over that. But what is another mindset issue that you've been able to overcome?
Uh, Um, it really it circles back to thinking I don't know as much as I don't think I know as much as I really do know, but
Hmm.
it comes to me as sharpening the saw,
Hmm.
as Covey says, constantly educating myself. Just being maybe if I can be one step ahead of the next guy or the next client,
Hmm.
it is a mindset. And if it was easy, if this business was easy, everyone would be doing it.
Yeah.
Okay, everyone would be doing it. But if you want, it goes back to Musk, but it's, we can solve problems for people. I mean, you are being of service and you can earn yourself a nice living. So the mindset is everything. And some people like doing positive affirmations. Some people like sitting in a dark room for 5 minutes, 10 minutes,
Hmm.
15 minutes every morning doing meditation. It's whatever you whatever gets you psyched up to enter that race, and per se in this race of sales, and we want to be in front of as many qualified candidates as possible sharing our message. And it's so the mindset is, number one, if it was easy everyone would be doing it. Two,
Hmm.
if I can just stay educated and keep myself informed, that gives me the confidence to go into a transaction. And it helps in our situation. These people need to talk to us. And you have to
Yeah.
understand that we are providing a value service. If you don't think you're providing a valuable service, then you're not, maybe sales isn't for you, or maybe
Hmm.
real estate isn't for you. But you have to position yourself as, these people want to hear from me. They want to hear from me. And it's a contact sport. The other side, what helps with mindset is we see the Michael Jordans or the Tiger Woods or the Michael Phelps or whomever. And I'll go back to sports analogies.
Mhm.
We only see them, hitting that golf shot on Sunday, right? We
Yeah.
only see the baseball player hitting the home run or playing in the game. What we don't see is all the work and effort, the practice swings, in baseball, the practice, the
Mhm.
golf shots. These guys are practicing 80% of the time, and we only see them performing the other 20%. So practice, practice, scraps, practice, practice, practice. I love scripts. I
Mhm.
think being prepared to answer those questions when they come at you is the best way to do that is to role
Yeah.
play and
Yeah.
practice your scripts. But you have to be prepared. This is not something where you go in willy nilly. I mean, you don't. You need to be prepared and constantly educating yourself, workshops, seminars, watching, podcasts like your own. I mean, there's so much free information out there that will better your skill sets. Be aware of current events, things like that.
Yeah, 100% agree. When you're talking about all those athletes, I just saw the quote yesterday, and I'd seen it before, but it's Usain Bolt. I've trained 4 years to run 9 seconds.
I, I was gonna. That's it's one of the best ones ever.
Yeah.
It literally is one of the best ones ever. And we only see him run for that 9 seconds, maybe
Yeah.
4 or 5 times, prelims, qualifiers, all that.
Yeah.
But he trained. Same with Michael Phelps. I
Yeah.
mean, all those years in the pool, Usain
Yeah.
Bolt, all those years, running tracks, training, physically training, mentally preparing. But we only see him
Yeah.
perform for that small little period of time. But it's all the work that leads up to that. I have my friend's son plays for the Cincinnati Reds. And I
Mhm.
followed him in baseball from the time he was 10, 11 years old. And I mean, always going to the batting cages. And this young man, I followed him in high school, friends with the family, going back since I was 10.
Mhm.
Um, he already had a full ride to the University of Oregon for a baseball scholarship, and he was playing high school ball. And I went back to pick up my son from a water polo event. And after the game, all the other kids on the team were gone. He was out running laps. And that's why he's a professional baseball player today. It's what we do during the quote off season in real estate. What we're
Yeah.
doing when we're not actually in the game that
Mhm.
gets us prepared for those opportunities.
And no one was telling him to run. He just went out and did it.
He had that internal, intrinsic, intangible motivation. You have
Yeah.
to find that too. I firm believer that intrinsic motivators are way stronger than external. External motivator might be the paycheck, the trophy. The
Mhm.
internal motivator, the intrinsic motivation is I'm competing against myself. I want to be the best possible person. I want to be able to provide for my family. Whatever your internal motivators are, I think they should be, you know, bigger than the external, the trophy, the tangible rewards.
Yeah, for sure. And just make it a non-negotiable. If this is what your goal is and this is how you get there. I'm in Dan Martell's coaching program right now, and he's got like five daily non-negotiables. No matter what it is that you're doing, where you are, this is what you do. And it's just not even a question, it's just what you do.
Period.
Yeah.
It's like getting up, putting socks on, taking a shower, brushing your teeth. These are
Yeah.
your. I love your idea there, Martel's idea of five non-negotiables. No matter what
Mhm.
happens today, I'm going to accomplish these five things.
Yeah. Yeah.
And then it comes down to time management, time blocking,
Mhm.
prioritizing. I love that idea, Jonathan.
Yeah, I wish I could take credit for it.
Right, right. Hey, I'm a metaphorical quoting guy today, but I mean, it's yeah, it is so important to time block, plan your day out,
Mhm.
non-negotiables, have a
Yeah.
plan, work your plan, and when we're in sales and real estate and whatever profession, we're independent contractors. So if we
Mhm.
don't do it, no one else is really going to do it for you. We're not being fed leads,
Yeah.
but our compensations, again, it's the only field I believe in where we have unlimited ability to have unlimited compensation financially.
Yeah. Yeah, absolutely. Well, Matt, I've taken up a ton of your time. Thank you so much for coming on. How can people reach out to you, and how can people work with you?
Hey, sure, absolutely. Jonathan, I thank you for having me on. It's a real honor and a privilege for me to be with you. Just you can reach out to me at Matt at Laridon.org. So that's Laridon.org, Matt at
Mhm.
Laridon.org. or you can reach us at my office toll free at 888 215 1031. That's 888-215-1031. Yeah, there we
I love
go.
that. I love that. And then you have a podcast as well. So I want to make sure that I put all of that in the description so that people can go to it. And I'll get that from you. Beverly will reach out to you to get that
Yeah.
information from you, just to make it easier. And then can people reach out to you on like Facebook and social media?
Facebook, Matt Laridon. I'm available. If I give you my phone number, I mean, people have my individual phone number.
Hmm.
I get calls all the day, and if I can take your call, I will. If not, I promise to get back to you. Follow through is a big part of my business success.
Yeah, of course. Amazing. Thank you again so much for taking time out to come on.
Jonathan, thank you. It's a real honor and a privilege. When you reached out to me, I told my friend I get to be on, Jonathan Chan's Road to One podcast. So I'm thrilled. I'm honored. I really appreciate the opportunity to connect with you again, and we're definitely going to be staying in contact.
Oh, for sure. Take care.
All right. Thank you, Jonathan.